Welcome, ladies and gentlemen, to Smart 24 TV and another edition of the Financial Markets Show. It's me, Nampija Gloria Christine, together with
Victor Chiberu.
And we are giving you updates concerning the recent market moves on the Uganda Securities Exchange. What do you have for us, Victor?
Well, yesterday was indeed an eventful day, as usual, and we had very many companies in play, and we're seeing a lot of movement from Umeme, we're seeing Stanbic and MTN, but just to dive right into exact numbers, at the close of yesterday's trading session, the Uganda Securities Exchange actually saw a total of 1,783,290 shares changing hands, and this is corresponding to a market value of 56,408,000.
That's right, Victor. And when we compare these numbers to our recent trading days, we observe actually a 35% decline in volume and a substantial 60% decline in our turnover. So the market this time around seems to have slowed down a bit. Definitely,
and we're seeing a really significant drop there. But now moving on to the current market capitalization, the Uganda Securities Exchange currently stands at 15.7 trillion, and it is always interesting actually to keep an eye on the overall health of the market.
Exactly, Victor. And looking into our trading session, when we look at in terms of individual equities that traded yesterday, we have 5 USA listed companies that were in the spotlight, where we had around 2 gainers and 7 losers.
Well, winners as of today are East African breweries, and this one in particular saw a gain of about 2.15% on its share price. We have Centum Investments, and this one in particular saw 0.91% share price appreciation, and it is always good actually to see such positive movement within these entities.
Interesting. And when we look at the flip side, though, we have Bank of Baroda that came out last with a share price depreciation of 6.67% and 14 Ugandan shillings per share. That's quite a blow to them.
Indeed, it is quite a blow, and following them was Jubilee Holdings with 2.16% depreciation within their share price. But coming right after it, we are seeing KCB Group with 1.19% share price depreciation, as well as MTN Uganda with a 0.58% share price decline. And it's actually a really mixed bag out here.
Exactly. And in terms of our trading volumes, we're seeing Stanbic Bank that actually took the lead with 1 million traded shares, quite an impressive one from our Stanbic Bank. Then we have Bank of Baroda that followed with 700,000 million shares, while we're having MTN Uganda and Umeme with 81,000 and 1,900 respectively in terms of traded shares.
Indeed, actually Stanbic Bank seems to be the popular choice among investors as of today, and it's always actually intriguing to see which stocks are grabbing the most attention.
Exactly. Now let's shift our focus to the all share index. The USA All Benchmark All Share Index dipped down by around 0.07% to close at around 902.05. This actually represents a 1-week loss of 2.49%, a 4-week loss of 2.5%, and an overall year-to-date loss of 25.61%.
It's been a tough ride for the All Share Index, and especially looking at it on the long-term aspect. But investors might be feeling the impact of those losses on their portfolios, that's for sure.
Exactly. And looking at the USA Local Company Index, we see a 0.5% decrease, closing at 279.35 points. This translates to a 1-week gain of 0.04%, a 4-week loss of 0.34%, and a year-to-date gain of 2.45%.
Well, the local companies seem to have have a bit of mixed performance.
Exactly, there seems to be some action happening.
Indeed, and it's actually interesting to see how these different sectors are actually faring up.
Exactly, and let's bring it up to the market analysis, Victor. In terms of these numbers, what do you take on the trading activity as of today?
Well, it's actually been an intriguing day for the Uganda Securities Exchange already. So looking at it, especially with the decline in both volume and turnover, investors might be taking a really curious approach in which current market conditions are behaving.
Exactly, and with 2 gainers and 7 losers, it actually seems like a really mixed bag. So any insights on this standout performance though that we have here?
Well, East African breweries and Centum Investment had a good day, and this is actually showing positive movement. And on the flip side, Bank of Baroda, Uganda, faced a really significant depreciation, leading the losers actually. And it's essential to consider that the reasons behind these movements, such as company announcements and economic indicators, as well as global trends.
Absolutely, Victor. Now, looking on to the trading volumes, Stanbic Bank took the lead. What factors could be driving such brilliant trading activity within the bank?
Stanbic Bank Uganda is one of the larger and more actively traded stocks on the USE. So looking at that alone, it is possible that investors are responding to recent news, earning reports, or actually overall market sentiment regarding the banking sector in Uganda. But high trading volumes can also indicate increased liquidity and interest in the stock.
Interesting, Victor. So when we look at our market indices, this is the all-share index and the local company index of the Uganda Securities Exchange, where we see these various movements happening from both. What could be driving the factors behind these various changes?
So, Gloria, the all-share index had a dip of about 0.07%, and it could be influenced by various factors. But in this case, would be looking at global economic conditions, geopolitical events, company-specific news, and many others. But for the local index itself, the 0.5% decrease may be reflective of the performance of the local companies as its name states, but it can actually be influenced by domestic economic factors and industry-specific developments.
Exactly. Thank you for those insights, Victor. And now wrapping up our discussion concerning the Uganda Securities Exchange, what tips could you have for our investors out there?
It remains really crucial for investors to stay informed about any upcoming company announcements, economic reports, as well as geopolitical events. So, because all these can equally impact the market. But additionally, monitoring trends in trading volumes and the performance of key sectors can provide really valuable insights into market sentiment.
Interesting. Now turning our attention to the telecommunications industry in Africa, where we have Airtel, quite a bigger player in the field, making headlines this week. So Airtel Africa is set to inject a substantial amount of fresh capital of up to around $825 million into operations across the continent. So this move comes after the company reported a net loss of $13 million for the first half of this year, which was quite a significant downturn compared to the $330 million profit during the same period but last year.
That is right, Gloria. One of the major factors contributing to this setback is the sharp depreciation of currencies in several African countries, including Kenya, Tanzania, Zambia, Malawi, and Nigeria.
Exactly. Now, let's not forget the looming debt issue. Airtel Africa is actually dealing with $550 million debt due to the payment in May 2024, adding another layer of financial challenge challenge within?
So rather, it's actually it's indeed a tough situation for the telecommunication company. But what caught our attention is that despite these setbacks, Airtel Africa seems to be holding firm to its strategy for the continent. And according to their unaudited financial statements, the company actually emphasizes that its capital allocation policy remains unchanged, and with a priority to continue maintaining a long-term perspective and committing to investments in each of their markets.
Exactly, and they've already invested around $500 million in spectrum acquisition, so including the 5G network. For instance, in Kenya, Airtel Networks acquired 60 in the 260 MZ spectrum band last year of around $40 million.
Well, in October 2022, Airtel Tanzania also secured 80 megahertz in the 3,500 megahertz band and 2 blocks of 15 megahertz in the 2,600 megahertz band for about $21 million and $39 respectively.
Exactly, and their commitment to our expansion is actually evident, but it's not without challenges. In Uganda, Airtel Limited is struggling to sell 20% of its shares to the public as required by the regulatory standards.
That's right, actually, and so far the National Social Security Fund (NSSF) has actually invested $52.7 million in Airtel Uganda. So this is equivalent to about 10.55% of the 20% stock on offer.
And the financial challenges actually don't stop there. We have the steep depreciation of currencies, especially in Nigeria, that has taken a toll on Airtel Africa's pan-African operations, wiping out $345 million of its revenues from the revaluation of foreign exchange liabilities.
And they're actually anticipating a further hit on revenues and finance costs if the dollar appreciates by an additional 1% across all currencies in their operating companies.
And that's great, Victor. And their largest exposure in the Nigerian naira, and a further 1% dollar appreciation could have a negative impact on its revenues, like the IDTAR and financial costs.
Well, it's a complex financial landscape, and they're actually navigating it, as we can see. But on the bright side, mobile money revenue has seen substantial growth, and it is increasing by about 30.9%, driven by East Africa and Francophone Africa.
Absolutely, and in East Africa, the group's revenues grew by actually 20.6%, fueled by growth in revenue, voice revenue, and data revenue, plus other revenues.
Now, Gloria, looking at their financials, Airtel Africa actually recalled 505 million bonds last year, saving about $26 million on interest payments. So they've been actively managing their debt and with an early repayment cost of about $19 million on part of their $1 million bond.
Exactly, and in July 2022, they were paid $450 million of the bonds, leaving them with around $550 million due in May 2024. So all these financial moves, along with the current volatilities, have impacted their net earnings.
Well, the net earnings dropped marginally by about 0.6%, and this was during the financial year ended March 31st, 2023. And it's actually a challenging time for Airtel Africa, but they actually seem determined to navigate through it.
Exactly. That was quite an interesting discussion, Victor, from
Indeed.
Uganda and Airtel Africa. We'll be going for a short break, and we'll be back with more insights concerning the Nairobi Securities Exchange and the rest of Africa. Thank you.
Smart 24, driving business.
Cooking oil like no other makes your meal so sweet and scrumptious. The taste of Uganda, yeah, the taste of Uganda, the taste of Uganda.
Farming practices are evolving in incorporating new technologies to address the challenges of agriculture, especially in arid regions like United Arab Emirates, UAE. UAE's commitment to modern farming techniques is essential for ensuring food security and sustainability. The UAE has embraced modern farming practices, which likely includes hydroponics, aeroponics, and other advanced technologies to grow crops efficiently in desert environments. The adaptation of modern farming in desert areas is crucial for countries like UAE, where traditional agriculture may not be feasible due to limited water resources and harsh environmental conditions. Mentioning the world's largest vertical soliless facility in Bostania showcases the innovative approach to agriculture. Vertical farming allows for maximization space and resource efficiency, producing an average of 3,000 leafy greens daily in a significant accomplishment. This efficient production can help meet local demand for fresh produce and reduce the need for imports. Saving 95% less water is a remarkable achievement. In water-scarce regions, conserving water resources is crucial for sustainable farming. The absence of pesticides highlights the commitment to environmentally friendly and sustainable farming practices. The UAE's investment in modern and sustainable agriculture is not only beneficial for the country's food security, but also serves as an example for other regions facing similar challenges. This technology-driven approach to farming can potentially be a solution to global food production issues, especially in areas affected by climate change and water scarcity. Bostanica translates to your garden in Arabic, reflecting the farmer's mission to provide fresh and locally grown produce in the urban setting. Bostanica holds a distinction of being the world's largest vertical farm, covering a vast area of 330,000 square feet. It is a significant investment in modern agriculture. The facility represents a substantial investment of approximately $40 million. This substantial financial commitment highlights the importance of vertical farming in the future of sustainable agriculture.
Bostanica, we are a soilless facility that produces 3,000 kg, 3 tons daily of leafy greens. We are the world's largest vertical farm. Zero herbicides, zero pesticides and all. And we use, again, 95% less than water than traditional agriculture. So whereas in 1 kg of leafy greens in conventional farming, you would use 317 liters of water. At Bostanica, the same 1 kg of leafy greens would be consuming only 15 to 17 liters of water, which is 95% less. And we're proud of this.
Bostanica boasts an impressive annual output of 1 million kilograms, that is 10,000 metric tons of fresh produce per year. On a daily basis, it produces 3 metric tons of produce. This level of the production can help meet the growing demand for locally sourced and sustainable food. The farm employs efficient growing techniques, with a journey from seed to plant-led taking just in 2 weeks. This indicates an advanced technology and precision agriculture methods used in this facility. Bostanica cultivates a wide variety of crops, including beet, parsley, lilac, Moni romani, ruby sky spinach, kale, arugula, microgreens, mixed herbs, and strawberries. This diversity allows for well-rounded selection of fresh produce for consumers. Overall, Botanica serves as an exemplar of the potential of vertical farming to revolutionize agriculture for producing large quantities of high-quality, locally grown food in urban areas, reducing the environment impacts associated with traditional farming methods, and addressing the growing demand for sustainable and fresh produce.
Smart 24, driving business.
Welcome back from that short break and welcome to another edition concerning financial markets and the market watch. So we are now looking at the Nairobi Securities Exchange and looking at the latest updates and insights on how it went down on the market yesterday. What do you have for us, Victor?
Well, starting with breaking down the trading summary, we saw a total of about 17,258,200 shares traded in about 1,190 deals. So this was amounting to a market value of 213,404,201 Kenyan shillings. And compared to yesterday's trading session, we actually observed a 6% decline in volume, and interestingly, there was actually a 6% improvement in turnover and an 18% increase in the number of deals. So, Gloria, what do you actually make of these numbers?
It's always fascinating to see how the market dynamics play out, Victor. The increase in the number of deals could signify more active participation from various investors, even though the volume slightly decreased. But the improved turnover might suggest that despite trading fewer shares, actually the market value is still substantial, indicating a potential value of the stocks being traded.
Absolutely. And when we look at the market capitalization of the Nairobi Securities Exchange, we're actually seeing it standing at 1.34 trillion Kenyan shillings. And that is quite a significant figure. And it provides a snapshot of the overall value of all the listed companies.
Definitely, Victor. And let's dive into the individual equities, though. Out of the 47 NSE listed equities, we had an equal number of gainers and losers. With 21 each, actually, we have Express Kenya that led the gainers with an impressive 9.82% share price appreciation and closing the day at 3.69% Kenyan shillings per share. Following closely, we have Olympia Capital Holdings, we have Longhorn Publishers and BOC Kenya. And however, Samoa Africa faced a share price depreciation of 8%, closing at 2.30 Kenyan shillings per share. So these actually led the losers when it comes to the flip side.
Well, it's always interesting to see which stocks are driving the market. But Express Kenya's performance today is quite noteworthy, and it would be really intriguing to explore the factors behind such a significant appreciation.
Absolutely, Victor. And in terms of traded volumes, Safaricom took the lead with 12.7 million traded shares, followed by Cooperative Bank of Kenya and KCB Group, and also Kenya Power and Lightning Company. Safaricom, being a heavyweight in the market, often commands attention with its trading activity. Well,
moving on to the market indices, the all-share index dropped by 0.50 points, and it closed at 85.54. And of course, this was reflecting a one-week loss of about 3.41%, a four-week loss of 8.5%, and then overall a year-to-date loss of about 39.89%. And the 10-share index, the 20 share index as well as the 25 share index also showed varying degrees of decline. So what's your take on the overall market performance?
Well, Victor, it's clear the market is facing various changes and challenges. So the downward trends actually across these various indices suggest a broader market correction or a period of consolidation. So investors might be reacting to these various economic factors, both domestic and global, influencing their statement and trading decisions.
Well, looking at the year-to-date figures, the losses are actually quite significant. And the 20-share index, for instance, is already down by 27.37%. And this might indicate actually a more extended bearish trend in the market.
It's actually crucial for investors to keep a long-term perspective and not to be swayed by these short-term fluctuations, and not considering the economic climate both locally and globally. What factors could you think could be influencing these various changes, the ups and downs and trends on the market?
That's actually a great question. And on the local front, factors such as economic policies, corporate earnings, as well as political instability can actually play a really significant role. But globally and events like geopolitical tensions and economic indicators from major economies and trends in commodity prices can also impact our market as well.
Absolutely. It's a complex interplay of various factors. Now let's talk about Express Kenya, Victor, the top gainer, with a nearly 10% increase in its substantial. Do we have any specific news or events from it?
Well, that's a good point, and it would be really interesting to dig into the news and corporate announcements to understand the driving force behind Kenya's impressive performance today. But investors are always on the lookout for such insights. But rushing to the exact insights on Express itself, it was listed on the Nairobi Securities Exchange not so long ago, and its performance, as in terms of the year-to-date performance, hasn't been so bad until the previous quarter. Exactly. But Gloria, what do you have from Express?
We're looking at Express Kenya. This company has actually a compelling story and is making waves in the Nairobi Securities Exchange. So it's a company with an interesting mix of services, however, from clearing to forwarding to warehousing and logistics. They even have an extensive fleet, making it a unique player in the market. So as we can see, Express Kenya is currently trading at 3.69 Kenyan shillings with a significant 9.82% gain in its share price, trading price as of yesterday. And
looking at in comparison with the previous closing price of about 3.36, Express actually began there with a share price of 4.71 Kenyan shillings, and we can already see that the price is significantly low from the start of the year, but it has since lost about 21.7% of that price valuation, and this alone is putting it at the 48th position on the Nairobi Securities Exchange in terms of year-to-date performance.
Interesting. And Express Kenya's performance is a mix of highs and lows, but getting into the nitty-gritty of this stock and looking at what makes Kenya actually tick. To understand these dynamics better, we look at their business model. Express Kenya operates under various divisions. So these divisions include the sea freight, the air freight, packaging and removals, transport, and warehousing. So this diversification actually provides stability to their operations and income streams. So actually, when we look at diversification in this case, it's a valuable strategy in the business world. So speaking of diversification, did you notice that Express Kenya has a whopping fleet of over 80 movers, including trucks, small vans, and even cladded stainless steel tankers?
That's impressive.
Quite impressive.
But putting our focus actually on the numbers, the traded volume as we speak is about 22,800 shares in about 53 deals. And This is valued to about 90,921 Kenyan shillings over the period. This is leaving us with an average of about 362 traded shares per session and a volume high of 3,400 that was achieved on August 31st for the same period.
Absolutely, Victor. And while there is a 9.80% gain, which is quite promising, it's essential to consider that they have also lost 8% of their stock value since October 16th. For shareholders, it's actually important to have long-term perspective, like we said, and to understand the market is ups and downs, and not just base your decisions on these short-term fluctuations in the market.
Well, and that has been it from Express. But going right back to the further details on the Nairobi Stock Exchange itself, and that was the gainer. Express Kenya was a gainer this time round.
Exactly.
And let's not avoid the fact that it has actually been a mediocre. Seeing it in one of the gainers now is quite something. But moving on to the losers, Gloria, what do you have? Which entities are you seeing on the losing side?
Well, looking at the losing side, we are looking at Cooperative Insurance Services Limited, which has also been making headlines. We all know that the insurance industry is one of the one that investors actually keep a keen eye on, looking at this variety of moves and lessons there. So this sector can be quite influential, actually, especially when we consider the diverse range of insurance products of companies like CIC that they offer. So they provide a coverage for both life and general classes of insurance, and part of their business, that's because the cornerstone of their operations since establishment in 1978.
And they have come a really long way, and they boast a market capitalization of 5.52 billion Kenyan shillings, and they are now ranked as the 23rd most valuable stock on the Nairobi Securities Exchange. So it's not just their services, but it's also their market performance that's making them noteworthy.
Absolutely, Victor. And it's interesting to note that CIC's stock exchange and experience is around 4.1%, a drop on the last trading day, closing at 2.11 Kenyan shillings per share. However, when you look at their performance of the entire year, they have gained around 8.21% on that price validation.
And that's quite the contrast. Actually, investors might be curious about what led to this recent drop, but considering their performance for the year, it would actually be really interesting to know if there were any specific factors.
Indeed, Victor, indeed. Especially since CIC Insurance Group has seen some recent fluctuations over the past 3 months. They have been the 15th most traded stock on the Nairobi Securities Exchange, and they have shown some market volatility during this period of time.
And with trading volume that peaked at 1.23 million shares, the stock certainly is in demand among investors. And the insurance sector actually often experiences fluctuations, but it's those very fluctuations that can actually present opportunities for traders.
That's right, Victor. And we might want to dig deeper into why insurance stocks actually, especially CIC, appealing to investors. They tend to offer defensive quantities and qualities, meaning that they can perform both well in bullish and bearish markets. So even in uncertain economic times, insurance companies actually remain always resilient.
Well, that's an excellent point. And when we consider the global economic conditions we've been facing in the recent years, those defensive qualities have never been more critical. But it's not just global events that actually influence insurance stocks. Local factors and as well as global factors play at the same time. They play together.
Absolutely, Victor. That's actually our point. The economic conditions in Kenya, for example, play a significant role when it comes to the opportunities of the companies now looking at CIC Insurance. So as for the leading insurers in the country, there are quite influential in terms of a local financial landscape.
True. And insurance in Kenya has seen considerable growth in the recent years with new players entering the market and a growing middle class that's increasingly aware of the importance of insurance. So this provides an interesting backdrop for CIC's activities.
Exactly, and it's both noteworthy that actually CIC Insurance Group has both life and general assets and classes of insurance in its portfolio. This diversity can be a strength, but can also present quite some challenges there.
Indeed, and that's an important point. It provides a broader image of insurance products, and it requires a robust risk management and regulatory compliance. But it might be interesting to explore how CIC ends up managing these aspects of their businesses.
Interesting enough, Victor. And of course, there's always this question of how they're positioning themselves for the future. Insurance companies actually tend to be forward-looking and adaptive. So it's great to understand their strategic initiatives.
And speaking of the future, it is quite actually significant that they've gained 8.21% since the beginning of the year. So that's a solid performance by any measure. And investors might be wondering if CICE can maintain this kind of momentum actually.
Exactly, that's quite a valid question, Victor, especially considering the competitive nature of the insurance industry. So CIC's strategic decisions and ability to adapt to the changing market conditions will be likely a crucial role in their future performances.
Indeed, and we should also consider the role of community, and many insurance companies have community engagement initiatives, and it would be interesting to know how CICE actually contributes to the well-being of the society in which they operate.
Exactly, an excellent point there that you have. So insurance is not just about financial transactions, but it's also about providing security and support to the people during some of the most challenging moments of their lives. So companies like CIC often play a vital role when it comes to that.
So to sum up, CIC's insurance group is a noteworthy player in the Kenyan insurance sector. So their recent market performance and stock activity are really intriguing. So we're eager to keep exploring these factors with you, our viewers, so that you can understand this stock much better, because you need something that is long-term, something that provides information on future plans, future strategies, so that you know the kind of stock you are investing in. But turning our attention, Gloria, back to the Nairobi Securities Exchange, we were at around the year-to-date figures, and the losses that were quite significant because the NSE 25 share index, for instance, was down by 27.37%, and this was actually indicating an extended bearish trend within the market.
Exactly, and it's also crucial for investors to keep a long-term perspective, not only be swayed by these short-term fluctuations.
Indeed.
Now, considering this economic climate, both locally and globally, what factors do you think could be influencing these factors, Victor?
Absolutely, a variety of factors are always in play when it comes to stock markets. But we actually talked about Express Kenya, that was among the top gainers, and everything that went around their entity and their strategies for future performance. But turning on to the flip side, in this case, we are looking at Samir Africa and it facing an 8% depreciation. Gloria, actually, any particular reasons behind this decline and how it could have possibly affected the soon bearish trend we are yet to see on the Nairobi Securities Exchange?
Well, Victor, it could be a variety of factors. Company-specific news is one factor that we all know. Industry trends or broader economic conditions could be influencing some of Africa's stock. So a closer look at its recent developments and announcements from the company could actually help clarify these points.
Absolutely. It's actually all about understanding the context and making informed decisions. So it's been a day full of market movements and insights, actually. And that is actually as we wrap up the Nairobi Securities Exchange, we have some interesting stories that could have affected the movements of these entities that we have shown you today. Actually, we're looking at Kenya's economic challenges and diving deep into understanding their recent statement from the Treasury Cabinet Secretary Njuguna Ndugu, who highlighted serious cash flow challenges in Kenya due to maturing debts. So, Gloria, can you help us understand what is going on?
Absolutely, Victor. So, according to Professor Ndugu, Kenya is currently facing a tight financial position, primarily because of the maturing short-term debts and a depreciating shilling at a very high interest rate. So these factors could have led to this liquidity crisis affecting the disbursement of funds to the developing projects in Kenya.
Well, it sounds like a tough situation. And Gloria, what exactly is causing these challenges?
Well, there are a few factors at play, Victor. First, we have these maturing short-term debts that are putting pressure on the country's finances. Additionally, we are seeing this depreciating shilling at high interest rates that have actually increased expenditures by a significant amount of around 145 Kenyan shilling billions, actually. So this will actually amounts to around $945.1 million to be precise.
So Professor Ndugu actually also mentioned that the government is not facing an insolvency crisis, but rather a short-term liquidity constraint. So to ease the pressure, they're considering buying back some portion of the euro bond, and at about $2 billion debt maturing in June next year. This move actually aims to reduce concerns about a potential eurobond default.
Exactly, but Victor, the Eurobond payment is a significant concern. So what is the government's strategy to ensure that this goes according to plan?
So according to Professor Ndugu, during their recent meeting in Marrakesh, Morocco, with the International Monetary Fund and the World Bank ministers for finance, he actually assured them that Kenya won't default on its public debt. And the government is also in talks with the IMF and the World Bank and other donors to actually secure between $4 billion to $5 billion by June next year to alleviate liquidity challenges.
And that's quite a substantial amount. I may be wondering how they may be confident about securing this financial support. So according to Professor Ndugu and the Treasury Principal Secretary Chris Kipto, both expressed the severity of this situation. So they acknowledge the tightrope they're walking and the need for budget cuts to ensure the country lives within its means. So however, they have seemed optimistic about the support from international financial institutions and donors.
So Gloria, speaking of international factors, Professor Ndugu also mentioned external headwinds and negative stocks. Can you elaborate on what those are?
Certainly, Victor. The external headwinds include the global rise in fuel prices exacerbated by geopolitical tensions, like the conflict between Israel and Hamas. So the Energy and Petroleum Cabinet Secretary Davis actually warned that the conflict continues. Fuel prices in Kenya would actually reach 300 Kenyan shillings. This is about $1.98 per liter. This, coupled with adjustments in exchange rates and interest rates, has added to the country's financial challenges.
So it seems like a combination of both the internal and external factors as putting pressure on Kenya's economy is concerned. But it's actually a complex situation where domestic issues like short-term debts and high interest rates actually intersect with external factors like global fuel prices and geopolitical tensions.
Exactly. So, and Victor, how are these challenges impacting everyday life in Kenya?
Professor Ndugu also actually mentioned that the cost of living has risen by supply-side problems, and the inflation is being fueled by the high cost of fuel, and the government is actually caught in a balance act. So facing calls to reduce taxes while dealing with underlying pressure on the cost of living is really hitting them hard.
Exactly, it's quite a delicate balance, Victor. So we'll continue to monitor how Kenya actually navigates through these economic challenges. Actually, this also puts a question when it comes to Uganda. So we'll be going for a short break and we'll be back with more insights concerning Nairobi and Uganda in terms of fuel prices.
Smart 24, driving business.
The Uganda Development Corporation is a government-owned investment firm tasked with promoting Uganda's industrial and economic development.
Sorot Fruit Factory is our flagship project. Its aim is to grow that business of adding value to fruits in this country. This country is endowed with a lot of resources. NADS OWC have been supplying inputs to farmers. The inputs are reaching a period where we need to add value. Talk about fruits, we are going to have a challenge if we don't move fast with the value addition component. So Soroti Fruit Factory is meant to address this gap, to process fruits, and mainly oranges and mangoes.
The Soroti Fruit Factory and Teju products are valid certification permits of UNBS because we renew them after 1 year.
Our membership are normally primary cooperatives, and we have 59 primary cooperatives. But when you translate that into individual membership, we have close to 6,000 members. Our area of coverage is very large. We cover 10 districts. We have estimated 80 million fruiting trees in Teso. And every season, we have 2 seasons, first season and second season. First season, we normally get around over 800,000 tons. That's why you find, the farmers have to look for other markets like in Kenya, Rwanda, and sometimes Southern Sudan.
We must clearly understand the aspect of a cooperative. A cooperative is a voluntary organization formed by members for the members, and it is democratic. They carry out their own decisions on how to perform. But for me, particularly the Soroti Fruit Factory was initially supposed to assist Soroti fruit growers. So what happens is that the government, in its wisdom, made a partnership. We organized the Soroti fruit growers into a cooperative society. This was an opportunity for them to come together. You produce differently, but you'll be able to market it together.
We are in a race for development with other nations. This UDC is one hell of an ammunition that we can use for our country. So, but we need to oil the ammunition. UDC and government and private sector, let's get our act together.
We are also the biggest makers of concentrate, orange concentrate, and mango pulp in the country. For oranges, we buy Hamolin, Washington Navel, Valencia.
We used to bring it fully from import. Now part of this import we substituted with the Soroti orange. Like that way, and in future also we are, because it is available in good quality fruits, pulps are available now here.
I do take it to Soroti Fruit Factory. I have about 280 trees. Those oranges have enabled me to do so many things. I've educated my children now. Many of them have graduated. I've managed to build my house.
This fruit farm is quite productive, but this is one of the source of income for our family, to see how we can extend this farm even up to the village, because we started some in the village.
If you plant the oranges and you look after them well, by the 10th year, you will be getting 24 million from 1 acre. From 1 acre. So that's why the NRM recommended that for the 4 acres model, number one, coffee, if you are in an area which can grow coffee. Number two, fruits.
Smart 24, driving business.
Welcome back from that short break, and we are diving straight into the latest financial developments in the market edition. It's me, Gloria, together with
Victor.
Exactly. Now, today we have a significant development looking at East Africa's energy sector, particularly involving Uganda and Kenya. So President Yoweri Museveni has defended a bold decision to halt petroleum purchases from Kenya, citing concerns over the inflated prices by the middlemen.
Well, Museveni actually claims that these middlemen inflated prices by up to 15%, leading to avoidable pain for customers. And it's actually a surprising elevation, especially considering the historical ties between the two countries. So in President Museveni's statement, it was quite striking, and he actually expressed disbelief that Uganda was sourcing a substantial amount of petroleum from middlemen in Kenya. He is now actually advocating for direct purchases from refineries abroad, potentially through Kenya and Tanzania, to reduce costs.
And that's right, Victor. And according to the president, a spot check revealed significant pricing valuations and variations. So, for instance, diesel was sold at $118 per ton by this middleman, compared to the $83 from bulk suppliers, and a 42.1% difference actually. So this raises questions about the efficiency and fairness in the supply chain.
So the President of the Republic of Uganda also highlighted the discrepancy in petrol and kerosene prices, and with middlemen charging about 58.53% and 44.3% more respectively. This move by Uganda is not just a financial decision, it's a strategic one, and it aims to secure a more transparent and cost-effective energy supply chain.
It's actually quite interesting to note that Uganda has already contracted these bulk suppliers and refineries to meet up its petroleum needs. So, and the President Museveni has communicated his decision to both Kenya and Tanzania. He's emphasizing the importance of regional approach to address the issue of these inflated price changes.
Indeed, Gloria. President Museveni is also only looking at short-term solutions, but also he's not only looking at short-term solutions, but as well as a long-term game changer. And a refinery scheduled to be built in Uganda is looking at those particular goals. So the president also believes that this will revolutionize petroleum pricing in the entire region, benefiting countries like Tanzania, Rwanda, Burundi, Western Kenya, South Sudan, and Eastern Democratic Republic of Congo.
Interesting, Victor. And now let's discuss the regional implications of Uganda's move. So Kenya earlier this year shifted from the open tender system to a government-to-government deal with the Gulf states. So how is this actually impacting Kenya's oil marketing companies, Victor?
Well, in my view, it's actually coming as a double blow for Kenya, and it not only did the country shift away from the open tender system, but Uganda's decision to bypass Kenyan OMCs entirely deals a heavy blow to the companies that have been supplying 90% of Uganda's fuel needs. So this is not only it not only actually affects local jobs, but also reduces tax revenue collection for Kenya.
Exactly, and Uganda has also chosen Tanzania to host buffer fuel stocks, ensuring a stable supply in case of market disruptions. So, Victor, in your opinion, how do you see that this is affecting the dynamics between Uganda, Kenya, and Tanzania?
It's actually a strategic move, Gloria, and by diversifying these options and engaging with both Kenya and Tanzania, President Museveni is not only ensuring a stable supply, but also creating a healthy competition that could benefit consumers in the long run.
Well, this move promises to reflect on the broader regional dynamics of the need for collaboration in the energy sector. So President Museveni has discussed this decision with both the Kenyan President William Ruto and the Tanzanian President Samia Suluhu. So it's crucial for the region actually to foster stronger ties for a very good economic and strategic growth.
The situation also raises questions about the role of middlemen in the energy supply chain, and President Museveni's emphasis on cutting out the costs created by middlemen actually highlights a broader issue that many countries face, and this is actually balancing the need for intermediaries with ensuring fair prices for consumers.
Exactly, and as we wrap up our discussion about these oil prices, it's actually clear that Uganda's decision is not just about securing a better deal for itself, but also about reshaping the regional energy landscape. So this construction of Uganda's refinery could indeed be a game changer, and ripple effects could be felt along East Africa itself.
Indeed, but before we leave East Africa and Kenya specifically, we want to also look slightly on the impact of drought on Kenya's energy landscape, because it is clear that it's playing a large role on the situation we're seeing within the energy sector in East Africa as we speak. It's actually the Energy Cabinet Secretary, Davis, actually recently revealed that Kenya is importing only half of the contracted electricity capacity from Ethiopia due to a severe drought affecting dam water levels in the region.
And that's right, Victor. Actually, David highlighted that Kenya has been tapping only 100 megawatts of electricity from Ethiopia, which is half agreed upon the capacity of the 200 megawatts from last year.
And this isn't just affecting the import deal with Ethiopia. Churchill actually disclosed that Masinga Dam, one of the key hydroelectric power dams in Kenya, hasn't supplied any electricity to the grid for the past 2 months due to low water levels caused by the drought.
Exactly. So the drought is hitting both domestic and international sources of electricity. In your opinion, Victor, what could be the implications of Kenya's customers?
Well, Mr. Davis pointed out that the drought has actually had a major effect on the cost of of electricity, with only 100 megawatts coming from Ethiopia instead of the contracted 200 megawatts. It adds to the challenges Kenya is facing in meeting its power needs.
Interesting. And let's not forget the significance of this Ethiopian-Kenya power purchase agreement that was actually signed last year. So it has seen a game change actually, and in reducing the cost of electricity in Kenya.
Absolutely. And the deal was expected to displace expensive thermal power and contribute to stabilizing power prices. But unfortunately, the drought has disrupted this plan, leading to increased electricity costs for Kenyans.
Exactly. And these power cuts and increased electricity costs are certainly not what the Kenyans needed, especially looking at these current economic challenges. So how would you think the government of Kenya is actually addressing this issue, Victor?
Well, power cuts and increased electricity costs are certainly not what Kenyans needed. So Mr. Davis mentioned that the situation is improving with the recent rainfall in parts of the country, and the Masinga Dam, for example, has actually started to fill up, but the effects of the drought are still lingering.
That's actually good to hear that there is still some relief in sight. Now let's talk about the broader economic impact. So high power prices have contributed to around 6.9% in percentage in terms of inflation rate in October. And according to the Kenya's National Bureau of Statistics, this is what exactly is happening and going on.
Well, according to what I'm seeing, that is correct. And the Energy and Petroleum Regulatory Authority recently raised the fuel energy charge, contributing to the overall increase in power prices. So this, coupled with other economic factors, is actually putting pressure on consumers.
Exactly. And let's not forget the foreign exchange rate fluctuation adjustment, which saw a significant increase. The situation is undoubtedly complex in this time.
For sure, and it's actually multifaceted, but it's a really multifaceted issue, but with implications from both the domestic and international fronts. The government will need to actually implement effective strategies to mitigate the impact on consumers and stabilize the energy sector as soon as possible.
Interesting. And as we wrap up our discussion, Victor, concerning the East African, it's actually clear that the weather patterns and climate-related changes are playing a significant role in reshaping Kenya's energy landscape. So be keeping a close eye on how this government also addresses these challenges in the coming months.
Indeed. But shifting our attention to the rest of Africa, we have insights from the Johannesburg Securities Exchange, one of the biggest stock market players or financial market players on the continent. So diving straight into the numbers, we're seeing a surge in trading volume, and with over 396 million shares changing hands in about 361,044 deals, there's actually a 44% increase compared to yesterday. So Gloria, what do you make of this?
Well, it's indeed an impressive uptick in activity, Victor. The market value of this transaction actually stands at around 18.69 billion rands, marking an 18% improvement in turnover. So investors were clearly active today, Victor, and always intriguing to see such a robust appreciation when it comes
No doubt about that. No doubt about that. And looking at the market capitalization, it's standing at 16 trillion rands, and it's always a good sign when the overall market is thriving. So let's talk about the individual equities. We have about 351 listed companies, and there was indeed a mix today. So how did they fare?
Well, there was actually a mixed bag, like you can see, Victor. We saw 110 gainers and 211 losers. While we have African-owned capital stole the spotlight among all the gainers with an impressive 50% share price appreciation and closing at around 0.09 ZAR per share.
Well, that's a significant leap. And moving on to top performers, we we are looking at Trelidor Holdings, followed with 11.71% gain. Collins Property Group with about 10.29%, and Mixed Telematics with 9.27%. So it's actually great to see such positive movements in various sectors of the economy.
Absolutely. On the flip side, however, we have some companies facing challenges today. We have Ellis Holdings that took the biggest hit with a price depreciation of 16.67% and 0.05 rands per share.
Unfortunately, they had a tough day.
Exactly.
And looking at Alpha Mine Resources Corp, it wasn't far behind with about a 16.59% drop, followed by Primary Health Properties with 11.67% depreciation, as well as Nsimbi Industrial Holdings with a price depreciation of 10.89%.
Exactly, Victor. And it's always crucial for our investors to keep a close eye out on these various gainers and losers for a well-rounded perspective. And moving on to the trading volume, we see Liberty 2 degrees that led the pack with a substantial 36.2 million traded shares.
It's quite an active day for them, don't you think?
Exactly.
And Fortress Right Limited actually followed closely with 34.7 million. We're looking at Dipula Income Fund with about 27.7 million, and Transaction Capital with 26.2 million. So high volume often indicates strong market interest.
Exactly. Now let's shift our focus to the performance on the JSE market indices. We have the Johannesburg Securities Exchange All Share Index, the J203, that took a hit, plumbering at around 2.35% to close at around 71,572.99. Victor, what's your take on this one, though?
Well, it's essential to note that despite today's drop in the index, it's actually posting a one-week gain of 2.76%, and looking on the 4-week side, we're seeing actually a loss of about 3.07%, and a year-to-date loss of about 2.02%. So markets are dynamic, and these fluctuations are indeed part of the game.
Exactly, and the small caps also had a positive weekly performance. The JSE Small Cap Index gained around 2.47% this week, although it dipped by 0.63% today. So it's currently holding a 1.5% year-to-date loss.
And the small caps also had a positive weekly performance, and the small cap index actually gained 2.47% this week, although it dipped at about 0.63% today, and it's currently holding about 1.5% year-to-date loss.
Exactly, and let's not forget about the large caps in this case. The large cap index actually took a hit today, down by 2.41%, but managed a 3.01% gain for the week, with around 1.41% year-to-date loss.
So coming right after that, we are looking at the top 40 index, and this is representing the heavyweight stocks. Also experienced a dip today, and it went down by about 2.56%, and it's actually posting a 2.75% gain for the week, with about 1.98% year-to-date loss.
It's actually interesting to see how these various segments are moving on the market, Victor. So the mid-cap index, which often reflects a broader market segment, fell by 2.56% today, but also gained 2.17% for the week, holding a 5.76% year-to-date loss.
So overall, Gloria, today's market movements were really dynamic, and they showcased an ever-changing nature of the financial market.
Exactly, but now moving our focus to one of our top gainers, African Dawn Capital, also known as AFDAWN in South Africa, which is quite a company with interesting journey in terms of its finance sector. So African Dawn Capital Limited was actually founded in 1998 as a microfinance business, but has evolved over the years. So they are now involved in investment advisory, management, and microfinance. It's actually always intriguing to see how these companies transform and adapt to the various circumstances.
Indeed, indeed. But the company is actually grew into a niche finance provider specializing in microfinance and structured property finance. So Afton wanted to reposition itself as a listed venture capital vehicle.
Exactly. Quite what now I'm looking at the shift in the focus, Victor. I wonder what motivated these strategic changes.
Well, looking at this, that is actually a really significant question, and it's important for investors that have been eyeing African Dawn for quite some time. So we shouldn't forget that they aim to reposition themselves as a venture capital vehicle to some point. So this transition actually was the transition strategy itself was a fascinating one, and it's actually what made them abandon. It's actually leading us to the question of what made them abandon this kind of course.
Exactly. So after his decision to abandon the venture and capital responsibility positioning plan was indeed an interesting twist, whereby they faced challenges related to the long stability, standing SARS liability actually, which we all know could be a quite complex issue. And this episode could have had far-reaching importances and implications on their business decisions.
And there was also a Zothi transactions failure. It would be actually great to delve deeper into what the transaction is about and how it influenced their overall business strategy.
Great, Victor. So there might be some valuable lessons learned from their experience actually. So the financial world is ever evolving, as we all know, and companies often have to adapt quickly as possible.
That is absolutely true, Gloria. And now, as at the numbers, African Dawn Capital Limited is currently the 408th most valuable stock on the JSE, and it is boasting a market capitalization of 6.62 million rands.
That's quite intriguing to see how their ranking on the JSE actually corresponds with their journey and their challenges that they have faced. So I'm curious to explore how actually this market privacy and perspectives on African Dawn and whether they are on a path of recovery or further evaluation and evolution.
Yes, it's actually an essential point to consider. And how do investors and market participants view a company like African Dawn Capital that has undergone significant changes and challenges over the years?
And if we take a closer look to their stock performance, they have quite the roller coaster ride. While they gained a 50% in the past week, they also lost 40% in the year-to-date gain. So these figures actually highlight the volatility in their stock price. But we'll be back shortly with more insights concerning African Dawn Capital. And from the losing side, it's me, Nampijo Gloria, together with
Victor Chigaru.
Thank you.
Smart 24.